Hi everybody, and welcome back to Hex Token Channel. Your host Superman in the house, and this video is pretty cool because we're going to be looking at the economic calendar for the United States for the upcoming period for the month of October 2022. These are in particular the economic indicators that will have a potential major impact on the market, or could do. Sometimes they don't, but these are the ones that are considered to have a high impact as opposed to a medium or low impact. And so let's get into it, folks. Economic calendar for USA, October 2022. Let's go. And of course, at the beginning of the month, the 3rd of October, we've got the ISM manufacturing PMI, so the purchasing manufacturers index here. Looking at a lot of the purchasing impacts there for top 400 surveyed companies. And of course, if we get a more bullish number than 50, it's typically pretty good. But of course, in particular, if we get a bigger number than 52.8, in the forecast previously we had 52.8, so that'd be bullish in terms of the manufacturing side and purchases there. On the 4th of October, we've got the JOLTS job openings, and of course this is a survey of job openings, and of course we're looking here, previously we had 11.239 million, 10.45 million is the forecast, so if we do better than that, that's pretty bullish for the market as well. Obviously this will all have a flow-in effects for the Federal Reserve, and interest rate rises if obviously things are very bullish in terms of employment and manufacturing, things like that. The ADP non-farm employment there is sitting at 132 previously. We'll wait for a forecast for that in terms of September change. The ISM non-manufacturing PMI is 56.5. It was 56.9, so pretty good last time. And of course, we'll be looking to see whether there's a bullish number there for September results in October. The crude oil inventories were down in the previous month. We'll see what happens in the upcoming month, and this is all on the 5th of October. So look forward to that at the beginning of the month. So these are your early indicators that may have a major impact on the markets in early October. So let's jump over to the next page. We've got October the 6th. We've got initial jobless claims, and so we'll be looking at that. We had 193,000 previously, and we'll be looking forward that. That could be of some significance in terms of people claiming. We just saw recently a reduction in jobless claims, which was a bit of bullishness there. We've also on the 7th of October there, as we start to head towards the middle of the month, we've got non-farm payrolls for September and the unemployment rate, key numbers here. And of course, we can see that we had 315,000 non-farm payrolls the previous month and 250 in forecast for this month. So obviously the unemployment rate 3.7, still expecting 3.7. So fairly, I guess it's around full employment. It depends on who you're asking, but that's still pretty bullish as well. So if we get bullishness in the unemployment rate being low, and of course the non-farm payrolls being high, then that would be bullish, and of course feed into the Fed Reserve. We've got the PPI there, and of course that is out for September. We'll see what the producer price index does there. Thursday, of course, moving into the middle of October there. We've got the core CPI and CPI for month on month, and year on year for the month of September. So this is very crucial. Obviously, the Fed Reserve doing the interest rate rises, targeting inflation. So we'll see how this comes in. Obviously, with the CPI year on year, it's 8.3 last time. A forecast for 8.1 to a reduction, which would be good for lower interest rates, better for the asset markets, right? Obviously, inverse relationship there. So we'll be watching this pretty importantly. Now, core CPI, remember, excludes food and energy, very important ones there. Obviously, seen oil come back down to about $87 over the last month. So we'll see how that goes over the period of time. That should have reduced nominal inflation in any case. But of course, core inflation excludes that. And of course, we've got a slight increase there, excluding food and energy. So we'll see how that goes. Obviously, as we move to the very middle of the month there, core retail sales. So we'll see how robust the demand side is. Obviously, that's a determinant of inflation. And of course, about 70% of the US GDP is consumption. So we were looking at these retail sales here on month and core retail sales for September. As we lead into the second half of October, we've got building permits coming in. See how the property market's already been showing a few issues. We had 1.54 million building permits in the previous month. 1.6 million is the forecast. We'll see how we get on with that. That's going to be a pretty interesting indicator on how inflation and demand is going with the building permits. Finally, as we lead into October the 20th, the Philadelphia Fed Manufacturing Index coming out, and existing home sales as well. So more around the property market and manufacturing. And so we'll see how that goes. We got down negative 9.9 Fed manufacturing, then Philadelphia, and are looking at a positive growth of 2.8. Existing homes were 4.8 million and are looking down at 4.7 million house sales in September. So we'll see how the market's going in property and new builds, and of course existing homes. Now that's going to be pretty fascinating. Now there may be occasional indicators that pop up after this, but these are the kind of leading ones that we have at the moment. Hope you guys enjoyed that. Don't forget to subscribe, like, share, hit the bell. Look forward to my next videos, and I will catch you then. Bye for now.